The Strait of Hormuz blockade is like threatening to send global inflation absolutely soaring. And yet, somehow, a massive chunk of crypto investors are out there just sleeping perfectly soundly.
Right, it completely defies standard market logic. I mean, with everything escalating globally, you'd expect this massive flight to, traditional safety.
Exactly. And so that is our mission for you today here on Casutalks. We're taking a deep dive into your April 13th, 2026 sources to unpack exactly how these escalating global tensions, the absolute explosion of stablecoins, and fierce new government regulations are, well, fundamentally rewiring the market.
Yeah, so to set the baseline here, BIT coin did dip slightly this week, right down to around $71,000. But we have to remember that was mostly just, predictable profit take.
Oh, because investors were cashing out after that recent rally, right? The one sparked by the higher than expected consumer price index data?
Spot on. But the real story, the actually fascinating part, is that crypto funds still saw a massive $1.1 billion inflow this past week.
Wait, let's look at the mechanics of that. Because if the Hormuz blockade is threatening major energy shocks and inflation is spiking, shouldn't people be fleeing to gold or cash? It honestly feels like BIT coin is basically becoming a digital mattress.
A digital mattress. I love that. Explain what you mean by that, though, in this context.
Well, one of our sources makes this point beautifully. BIT coin has a hard cap of 21 million coins. It is strictly unprintable.
Right. You literally can't make more of it.
Exactly. So when governments inevitably have to fire up the money printers to deal with the economic fallout of the blockade, that 21 million cap gives investors serious peace of mind. It's an undilutable asset.
That's a great point. It's the ultimate hedge against fiat inflation.
Yeah.
But here's where we hit a speed bump, because not everyone has the stomach for that kind of volatility.
Yeah, definitely not me.
Right, so if you want the digital mattress without the roller coaster ride, you move your capital into the stable coin market.
Oh, right, because if BIT coin swings are just too stressful, you peg to something stable.
Exactly. And this sector is just booming right now. I mean, the stable coin market is projected to hit an astronomical $3 trillion by 2030. Heavyweight issuers like Circle and PayPal are seeing massive adoption.
Wow, 3 trillion, that's huge.
Yeah, there's even a dedicated blockchain specifically designed for this. It's literally called Stable, and its associated network is up 80% this year alone.
Okay, wait, I have to call out the paradox here, though. If a stablecoin is designed, by definition, to always be worth exactly $1, how on earth are people seeing 80% returns?
It's such a great question. So the 80% return isn't coming from the $1 coin magically becoming worth $1.80.
Right, that would defeat the whole purpose.
Precisely. The return is on the underlying infrastructure. Investors are buying into the blockchain network that facilitates those massive transaction volumes. Yeah. So they're earning a cut of network fees and staking yields.
Ah, okay, that makes sense. But doesn't this massive growth bring us to a major red flag? Like, didn't the IMF just drop a warning saying stablecoins could actually amplify financial shocks?
They did. And it sounds terrifying.
It really does. How does that bleed into the real world?
Well, think of it like a shadow banking system. If billions of dollars are moving around outside traditional banking guardrails, and suddenly a major stablecoin loses its $1 peg during a market panic.
Oh, people would freak out and try to cash out all at once.
Exactly. The issuers might have to mass liquidate their traditional reserve assets, like U.S. Treasuries, just to cover withdrawals.
Wow.
And that sudden dumping of assets could severely drain liquidity from the traditional financial system.
Okay, so the anxiety over this market chaos is basically driving two extreme reactions. Like, quantitative traders are desperate to mathematically predict the volatility, while governments are just desperate to cage it.
Precisely. On the prediction front, researchers at Universitas Erlangga just published a really fascinating study. They proved that a highly complex model called the Fourier series estimator actually beats traditional forecasting models
Wait, beats them at what exactly?
at predicting Ethereum-free prices post-halving.
Hold on, isn't a Fourier series usually used in signal processing? Like to map radio waves or something?
It is. And that's exactly why it works so well here. Traditional financial models often assume these nice, neat, linear trends.
Which crypto definitely is not.
Right. Crypto markets move in extreme, chaotic, cyclical waves. So the Fourier model is built to analyze complex, repeating wave patterns. This makes it far superior at mapping ADE-REIM's volatility.
So we're basically treating crypto like a volatile frequency now. I kind of love that.
Wild, right?
But while the quants are doing advanced calculus, Regulators are just bringing out the iron fist. I mean, look at Japan. They are completely reclassifying crypto as a traditional financial product.
Yes, and the stakes are suddenly incredibly high over there. Under their new laws, violating these strict traditional reporting and auditing rules could land you up to 10 years in prison.
10 years? I mean, that is not a slap on the wrist. That's treating crypto offenses exactly like Wall Street insider trading.
It really is. The global net is genuinely tightening around the average investor.
The Wild West era of crypto is just rapidly closing.
Definitely. It's a completely new landscape now.
Which leaves us with a pretty provocative thought for you to ponder. If governments successfully regulate crypto exactly like traditional centralized finance, will it eventually lose the very independence that helps those digital mattress investors sleep at night?
It's the ultimate paradox, really.
Yeah.
We're just going to have to see which force wins out in the end.
A huge thank you for joining us for this deep dive into the sources on Casutalks. We really hope this gave you a whole new lens on the market.
Yeah, thanks for tuning in.
Make sure you come back tomorrow for more daily news. And hey, don't forget to like, share, and comment the phrase digital mattress down below. We'll catch you next time.